Welcome back. And we are back baking at 350 degrees Celsius this morning because, well, actually not so much. It's pretty fucking cold outside right now. Looks like it's snowing, but no, it's just overcast. And Bitcoin pretty much doing its own overcast for the last 24-hour session. As we spoke about yesterday, was likely we're probably just going to be ranging in the very, 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 very low time frames between that $9,100 level and that $9,400 ceiling. So very little has been happening on the higher time frames, but because today is a Sunday, I would like to be talking about some more long-term analysis. Also want to I suppose talk about these same things on the lower time frames as well, as there are a few plays emerging. Actually, there is a little bit of a short-term time frame play probably gonna emerge by the end of this video, so we can get into that. I do want to follow up on a lot of the questions that I've been getting on the derivative situation, and with that said, let's get into the app scene right here and see what we got going on. Bitcoin trading at about 92.80 across all major exchanges, although it looks like the Asian zone and the East Asian zone a little bit lower than North American zone. Kind of strange to see that there, but more importantly, we do see that open interest has actually gone up above that $1 billion marker. So we are getting closer and closer to that move. I do think that we get the quote-unquote move out of the lower time frames, out of the lower time frame range, I should say. Likely when CMEs open, sometime between when CMEs open later today at 5 p.m. Eastern time and when the U.S. opens for their regular trading session tomorrow, which would be 9:30 a.m. Eastern Standard Time. So with that said, total market cap is pretty much flat here. Yeah, we gained a little bit back. Altcoin market cap again it gained a little bit back, but this is null and void as far as I'm concerned. Fear and greed index has ticked up a little bit here. About I believe we were at a 51 read yesterday, which now I'm realizing it would be nice to have a prior day, or perhaps it's an average of the past 7 days to kind of compare it with. So we are flying a little bit above. But that is strange to see. It would be a little bit strange to see as the market gets a little bit more optimistic when price action has really been flat. Which again, for full disclosure, I am long here, and I actually do think that Bitcoin does work its way higher. But there's still lots of things to talk about and a lot of things to be aware of. And of course, with anything, and I hope that I'm very, very deliberately clear with this, there's always an opposite side to that take. So while it might be bullish right now, there's always going to be a price point where I say, hey, this is where my bias flips. I'd be happy to put on likely shorts at that point and target moves much lower. It's never a crystal ball type situation. That is the illusion that many present on good old crypto YouTube and good old crypto Reddit and crypto Twitter fucks as well. These great people and all social media venues, just perpetuating this very strange myth because, it looks cool when you say, I'm going to call a move to 11,500 today to the fucking T. And, every once in a while you might get it right. But which is going to look really, really cool and really, really sexy and gain a lot of clout. But can that be done over time? Well, that's not real trading as far as I've experienced it. And this is coming from a background in traditional markets as a professional market maker, authorized trader with a Series 56, who's been around some of the best traders literally in the world, both on the floor of New York Stock Exchange ARCA and then later above the Chicago Board of Ops Exchange, which met a lot of just very, 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 very successful traders who have been doing it 30, 40 years. My mentor himself had been doing it 40 years by the time that he hung up his shoes, if that's the right terminology. Let me just get rid of this window right on over here. Let me make sure that this is recording. I'm going to do it earlier today. Nice. I think the microphone's working, but I can't really see it right now, which is kind of scary, but I'm going to trust in God right now. Anyways, so yeah, when it comes down to it, it's always a give and a go. And trading is essentially giving up in one direction. If I could define trading, it would be giving up on one trade in order to get into another. If that opportunity presents itself, it's not hodling on because my analysis told me that I'm gonna be right. Well, no, of course not. Analysis is subjective, and you could have multiple interpretations for things. The major key is just to find these inflection points, these pivot point, what I call pivot points on the market, and you can base trades around that pretty damn easily, and you could be just as right as you are wrong. But in that dynamic, there's always an opposite trade on the other side, which, in theory and typically in reality as well, will produce a net profit over time. So that's the thing, is like people think I think from doing this YouTube channel and conversating with a lot of people and seeing what big common issues there are, and also relating back to my prior experience when I was first starting, I think the biggest thing that gets people is they think that because their analysis is quote unquote right, which it might or might not be right, it's hard to first confirm that fact, then their position should also be right, and you're gonna hold to that one until it goes in your fucking direction, because god damn it, I fucking got the right answer on this test and give me my good grades. Well, it doesn't really work like that. You have to maintain this flexibility within this market. Anyways, let's go on to the derivative situation. I do want to follow up. I've been getting a lot of questions about this still. I want to first formulate this statement by saying, hey, I'm not saying that anyone should get off Deribit or anything like that. I'm saying that I will myself would be getting off Deribit, but I'm not here to tell you what to do. I'm not here to be your dad. I'm not here to be your mom. I think that that's also like demeaning and degrading, and that's what I'd hope to not do, like to fucking downwardsly talk to someone on a channel. Like I fucking hate it when someone does that, when I feel like someone's doing that on YouTube to me. So I'd imagine that probably the same here too. Probably wouldn't like it if I did that. I'm just sharing my thoughts on that. With regards to that situation. Funnily enough, I got on the phone with my mentor last night and actually spoke with a few of my other friends from traditional land, just by happenstance. And the first thing that my mentor said after I spoke with him, he's like, "Yeah, so you're going back to traditional after that, right?" It said, "Well, Maybe not, but I think I'll probably just end up waiting for CMEs to put up options." I think that, cryptocurrency being in the wild, wild west, it has really been revealed. The emperor kind of has no clothes this past, just in like one day, we saw BitMEX leak a shit ton of their customers' emails. Their Twitter got hacked. Then we saw the Deribit situation happened. Then we saw some other exchange have like some weird print to like 15,000. And then there's like, all sorts of weird shit going on in this market, which, as a trader, you want to reduce like as much risk as possible that is not due to your technical analysis. Well, one of the reasons why I like trading something like Bitcoin is that it does trade highly technical, just like a commodity. But these sorts of exchange risks are very, very scary to me. I feel like I dodged a humongous bullet by just not having any sort of like a resting stop on that day. And it could have just as easily gone against me in the other way, and I would have been out probably a good amount of money, especially on my main account. So again, it's one of those things where it's here's what I mean by taking responsibility, even if it's not technically your fault. I've spoken to this concept a lot. Taking responsibility when it is not really, when you don't really even feel like it's your fault. But here's how I take responsibility in a situation like this. I changed the exchange. It's unacceptable to ever have that, ever fucking ever. And I've been relayed a bunch of messages by people saying, but Deribit said this in their Telegram. Listen, man, Deribit saying whatever the fuck they want to say in their Telegram is great, that they're fixing the situation, or that they're going to fix the situation in the future and all that good stuff. Here's the thing though, man. Again, coming from a traditional market background, I have a very, 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 very difficult time to believe that any exchange in this market does not have rollback, just whatever software, whatever procedures in place. This is a common thing that happens. Everyone knows that it's a possible thing that happens. We know how to deal with it. We have industry standards. Well, not really for crypto, but in traditional markets. And these are things that any sort of a competent exchange would have planned for well in advance. I have a very difficult time to believe that they never once even considered constructing something like that. Especially when they're doing a little bit more complicated operations than the traditional exchange, not the traditional exchange, but the traditional crypto exchange, right? They're offering futures and options and all that good stuff. And for the most part, Deribit was pretty damn good to me up until then, but and perhaps they might still be. But again, this is what I mean by taking responsibility. I will not let that happen again because I will not be trading there again. Doesn't mean that it can't happen to me on another exchange, but I would much rather go with an exchange that has not given me the past prior history that this kind of thing can happen. So To me, again, to kind of wrap up that whole talk, I think the big thing that people don't understand here is that, or what's kind of causing some confusion, is that Deribit is coming out and kind of like, proclaiming themselves as the savior by reimbursing people out of their own pocket. Listen, man, I'm going to show you something that's kind of that I'm gonna say some a little bit harsher shit right now, but I think that's a little bit of an illusion, a little bit of a smokescreen. To not roll back trades in that situation, there's no reason not to. There's absolutely no reason not to. I know that people have said that it's a market makers and liquidity providers. That's the reason that Deribit gave, and some very perhaps misguided person on Twitter who wants to get into like some sort of a war with me, I guess, as well. This is wrong. If you are a market maker, if you are a liquidity provider, you're not just on Deribit, right? You're trading on multiple exchanges. When I was a market maker in traditional markets, I had a feed to every possible fucking exchange. I'm talking about, well, obviously PCOS, or ARCA, which is what I was trading on, New York Stock Exchange, NASDAQ, Miami Exchange, PhilX, fucking ICE, ISE, all these different ones. And it was for this exact fucking reason for this. And that's because sometimes an exchange does have issues. So what do? You go and hedge on the next exchange. And I'd be very, 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 very impressed to find, or very dissatisfied to find, or very enlightened to find, if any sort of a legitimate market maker or liquidity provider in this market wasn't at least connected to multiple exchanges in this situation, which would have averted that crisis. It would have been a non-event. It would have not fucking affected them at all. We have protections in place. This is a known issue that's been known since the dawn of fucking trading. It's like what the fuck, man. So completely unacceptable. And all my friends in traditional land are now. I'm like the laughing stock of this. Like, hey man, you're fucking crazy. They all think that I'm just like batshit crazy for even entertaining this space to begin with. After this happening, and they were actually quite interested in it before. And now they're like, fuck this, man. Like, are you fucking kidding me? Because here, let me show you what's happened. So I've actually brought up Deribit on my screen here, and I want to show what I believe happened. So I'm going to go to the live scene right now. You see this wick down here. You see this wick down all the way to 7,700. This was the bad print in question. And again, this is different than situations that you've seen in the past on perhaps like Coinbase, where you have a flash crash. Coinbase situation was legitimate. The reason why is because the books were very, very thin there. A couple of probably like iceberg orders tripped, or maybe, some stop losses triggered on some bigger orders. Maybe it's a fat finger, who knows? But those were real trades, put in by real people. It was not what we're looking at right here, which was an exchange error. They showed the wrong price on one of their index feeds, which was not consistent with reality. So it's quite literally showing a different price than what was reality. That is an exchange error. The exchange takes responsibility for it. The exchange should take massive, well, they should take a massive loss on top of that, because they should pay it back, and that's what they did not want to do. Now, let's take this just one step further. You see this wick down to 7,700 right here? This is on a 5-minute. So that means that all of this price action happened in a 5-minute span. And if I don't believe that we can go to a lower time frame, this maybe we can, but if I do go to we can actually go to a minute, which I'm sure that's probably the same thing, but I don't want to scroll back again because it takes too fucking long. My point is that all of this happened pretty much simultaneously, right? So what does that tell us? Well, we can look at the volume done on this dildo right here. How much volume was done on this all the way down to 7,700? 25 million. So someone got to buy $25 million worth of Bitcoin at that price, and they get to fucking keep it. This is absolute fucking bullshit. Someone just stole. They just printed money. They just fucking printed money. And where does that money come out of? Well, if they withdraw it, then that gets realized. And they just made that out of thin air. That is fucking. That's at the terrible precedent. Absolute terrible precedent. What's stopping any other exchange from from doing something like this? Now, I'm not going to go into too much tinfoil hat bullshit here, but it is very interesting to me to see that they would rather just reimburse like 150 Bitcoin, which is nothing, which shows that either they have a lack of liquidity there, or they're not really reimbursing everyone. Of which I've been getting a lot of messages from people saying that Deribit has not followed up on their end of what they said they would. And instead, and instead of rolling back, which would have gotten rid this, it would have erased all of this right here, would have just said, okay, the exchange fucked up. We go back and just act as if this didn't happen right here and resume trading. Yes, there's a little bit of risk involved with that, absolutely, but that's why you have access to other exchanges. As a trader, as a retail trader, anyone can fucking do it. As a market maker, liquidity provider, you 100% fucking sure are doing it. I mean, Jesus fucking Christ. If you aren't doing that, you're not really what you say you are, which is why I'm very skeptical about some people on Twitter which have expressed opposing views. Perhaps maybe they were in it. I don't know. And again, that's more tinfoil hat shit. I can't say directly that that happened or not, but I can say that it's certainly on my mind's eye. I've just been talking shit for the last like 15 minutes now. I haven't even talked about a goddamn thing on Bitcoin itself, on price action. I apologize about this. You guys are probably coming here for that, and I'm just talking about all my own stuff. Anyways, I wanted to quickly reference that. We'll get into the price action right now, but hey, I've already forgot, man. I would like to wish you well. It is a nice little Sunday, and so we'll be focused on some more high time frame price action today. Can't really promise that there's too much new things to talk about. Although, well, there's a few new things to talk about. So let's get into it right now. But as always, I would like to wish you well, man. I like to wish. There's no reason not to wish people well, man. It just makes the world. If people had more smiles on their face than they did not, I do think the world would probably be a better place. So hey, man, I hope that helps in some way. And as always, wishing you the best of the best and the happiest of the happiest. Let's get into this right now. Bitcoin on the daily, still maintaining above the 200 simple right here. More importantly, we do see the red 10 simple really, really governing price action now. So it's catching price action and now has gotten above all major moving averages. So we're starting to see the initial etchings, we're seeing a more mature etching of all of these lower periods starting to migrate above the higher periods. The 21 has gotten well above the 200 exponential moving average right now, and it will be coming into contact with the 55 exponential moving average relatively soon. Now, that's the next big cross that I'd be looking for. If we do get the 21 crossing over the 55 right here, I would put a lot of weight on that. The last cross that we saw was obviously the bearish cross, which happened right around here, right around 10.3. That was the point which I really started to get bearish myself. And, well, this was a 30% move to the downside. Now, I'm not saying that Bitcoin's gonna have a 30% move to the upside, but I just want to show that historically speaking, it does get things pretty damn well, especially after a consolidation, which this area right here obviously was a consolidation, so it wasn't all that well. Even though if you blindly traded it, you actually would have come out on top, or you would have had at least a chance to come out on top, but it wouldn't have been good. This is great for buying breakouts, so I would be looking for that as the next one. Sorry, I was looking at the 10 simple and the yellow 21. What I want to focus on is the 21 and the 55. Actually, the 21 and the 55 led us all the way up from. Wow, Jesus Christ, man, completely wrong on that one. The 21 and the 55, pretty damn powerful in Bitcoin's history, crossing right in over here during this consolidation, coming off of the lows around 3,700, brought us all the way up to 14,000. Now, again, I'm not necessarily suggesting that that's exactly what's going to happen. Let's go through 2018, which was a long form consolidation. We do have, we do have a lot of one-off signals to the upside, but this was a downwards market, so the downwards signals were to be looked at as more powerful. This is why I would rather trade on the side of the overall macro trend rather than fight it. So again, does hold some weight in this scenario right here. Would we be trending to the upside? Well, on a daily time frame, if we can close above 95.50, then yes, we would have higher highs. So that'd be pretty damn cool. So I would say I would look for those two things to happen simultaneously, and if that were to happen, I'd be looking for price action to find its way back into the lower 10,000s. 10.3 to 10.5 is where I'd be looking towards. And right now with the 10 simple kind of governing price action, that is the lowest period that I have on the board right now, and that is that kind of is setting the stage. So as long as we maintain above this area right here, I am, from a daily time frame perspective, and even up to like a weekly, monthly bullish, especially as long as we're above the 200 simple. That's kind of my risk management area. Like I said, I am still long on this. From about the, this is the problem with the derivative situation. I would have been long from like 84, 8,500, wherever, I forget what my price was. I think it was like 8,400. I do believe I posted a story on YouTube. So if you wanted to see exactly where it was somewhere right around there. It doesn't matter anyways. It got taken out because my streamer streamer account was liquidated on that move to the downside. Yes, I was reimbursed, so I technically did not get hurt. And then I just re-put on the position somewhere like right around 90.50 or 9100, I believe, 2 days, or was it yesterday morning or the day before that? Again, I forget. Market's been pretty quiet, so it hasn't really garnered too much of my own personal attention. I'm really just focusing on making the most of the setup right now, which I hope to reveal sometime this coming week. More on that. Finish UPS, you fucks. Anyways, so yeah, that's my disposition right here. I am looking at this as I'm happy to be bullish. I'm happy to be long as long as we're maintaining above there. That also means, and again, going back to the prior discussion of the beginning of this video, if we break below this area, I will switch my bias. I will immediately target a move down towards like 85, 8600, and I would probably look for a small bounce there and look for a continuation down to the lower 8000s, like 8000 to 8200. I would get somewhat bearish off that. It's just the same thing on this 377 expansion average right here. Remember, I was short right around 82 to 8300. Got the move the whole way down, bought a little bit at 73.50, and then we reversed back up. I said the 377 was my risk. Was my bias change area, and I couldn't have told you that we're just gonna fucking rally our way all the way up to like 10.3, or 10.5 on some exchanges. But I could tell you that my bias would certainly change. So that is why I did flip long somewhere in this region right here when I did, get off the plane, which was kind of crazy. I was actually traveling during that day, so I just, I saw it right. I had resting stop losses, stop buys, and quickly got into it long after that. But the same thing here. It's the exact same thing that I'm looking at. If we violate this area right here, I will change my bias, just like I changed my bias on this area right and over here. The problem is that people, again, a lot of people will just, will just look at that as, so you mean long. It's like, what the fuck? There's always an opposite side. That's trading. And this channel is focused on trading. So yeah. Anyways, let's see what momentum oscillators is looking like right now. We do see daily Stokes are kind of snaking around at the bullish control zone. In fact, they are maintaining the bullish control zone right now, but they technically are down. But you do see that it is a weak down. So any sort of a move back up to the top side of the range, which I would equate on a daily to about 95.50 to 9600. Probably does cross those back to the upside, and we will get that continuation. The RSI, I actually kind of like this signature right here. Yes, we did get rejected from the bullish control zone, but that's likely to happen on your first test, on your first pass. I think that kind of holding it steady here as price action essentially just goes sideways, allows it to reset, and then and then we can likely get our next move. Not only that, but, and I spoke about this yesterday, I think that this is a little bit more clickbaity, but I'll talk about it again. Technically, we do have a bull flag in play here. In fact, we might even be able to break it today. We might even be able to confirm above it today, but something like this, and it would have a pretty impressive target, to be fair. I'll do the most aggressive target first, which is going to be pretty insane. Which is going to be somewhere like right around, let's see, can we get it up here? Yeah, it would be right around about 11.5, which does line up with macro areas. In fact, I'm going to put in a horizontal right there just to keep track of it longer term. And then there's a few ways of doing this. You can take this from multiple different places just because this one is a little bit in a weird place. And this next one does line up with that horizontal that I have right around about 10.9 to 11,000. So both of those very much relevant. And I do believe that if we do break above and close a daily dodo above about, let's call it 9600, just to be a little bit more conservative and err on the side of caution, I would be looking for a move, over the next, after that, maybe over like the next week into this region here, anywhere between about 11,000 and 11.5. It would look good to me. So what I'll do is I'll actually put in a nice blue box territory right there, right now, and we'll keep an eye on that going forwards here. Again, this is all predicated upon the fact that we get a daily dodo close above about 9600. If that happens, I would look at this as mostly as good. Historical volatility percentile still maintaining above the moving average on this and still expanding. I do believe that we're still set for expansion. We got plenty of room to roll over here. We got all the way from about 60 to 100. This move really does want to get going, so I do think that this is still an active move, and realistically, whether you're bullish or bearish here, I think the way to trade this is the fucking same. I could say that I'm completely neutral, and I could say that I'd be bearish if we break this area right here. If I'm not already long, which I'd be buying above 9600 most likely and targeting move into the 10,000s, as I just showed. So something like that is what I'd be looking towards. Anyways, let's go over the 2-day and 3-day. Let's see how they're shaping up right now. The 2-day actually did close yesterday. The 2-day did close above all major moving averages. Does look a little, it's kind of trying to flag out as well. You can see same thing as the daily. We're not really getting too much from this time frame. What is concerning is that we are seeing 2 days. Well, concerning and also not concerning. There's a good thing here and then a counterpoint to that. We are in the bullish control zone on the 2-day Stokes. My issue with that is that price action has been mostly flat here, so it hasn't really done all that much. We're kind of using the momentum. We're kind of chewing through a lot of that momentum and not really doing anything on price action. But that's less important. We are in the bullish control zone, and there is still plenty of room up there, and it can certainly stay up there if we want to trend. More importantly, the 3-day did close, and we did close as a nice, what do you want to close, like a doji-ish dildo, above all major moving averages, using the 21 as support. And now we're getting divergence between the 21 and the 55, telling us that the trend is strengthening to the upside. I do like that, and I do put a lot more weight on this. I think that this chart's a lot more helpful than the 2-day right now. 3-day Stokes, plenty of room to roll the upside. I've spoken about this ad nauseum, but 3-day Stokes crossing up from this region here in the past has called so many great lows. It called the 3100 low in December, called one of the major rallies in 2018 in June from, I believe, 6,000 to 8,300, called another great rally from 6,000 to 10,000, called another great rally right here from 6,000 to 12,000. All pretty damn good moves, and even in counter trend markets. So you'd imagine that a cross like that in a bull market, if we are in a bull market, would garner you a lot more. And if it's doing that much in a bear market, it does certainly get some play. Not only that, but we do see 3-day RSI maintaining above the neutral zone, maintaining above the neutral line right here on RSI. So I do think that that's okay. More importantly, we do still have this falling pizza right here, breaking to the upside, falling wedge, perhaps if you want to call it that. Put a lot more weight on something like this in RSI also than I do on price action. In fact, I do not play any wedges on price action pretty much ever. I'll chart them out and shit because people will talk about it, and you look like a fucking moron if you don't call it, and other people call it and then they get it right. But yeah, I don't trade. I would never trade them. In cryptocurrency, in traditional markets, they do seem to work a little bit more. But in cryptocurrency land, from research that I've seen from my friend's quant firm, very, 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 very small hit percentage rate. In a counter trend market, wedges do like literally less than 30% hit rate. In same direction of trend, it does like about low 60%, I believe it is. So I don't think that's not good enough trading for me. And I want to make the analogy of like, if you're familiar with poker, or if you've ever played poker, there's like certain hands that have an 80% chance to win, and then there's certain hands that have like a 55% chance to win. Can you make a living out of playing both those? Well, yes, but think about it. If you're gonna be over leveraged like a lot of people are, you really don't want to be taking the 55% chance one, because it only takes a few losses for you to wreck your account, and then you don't have enough iterations to even give yourself that that statistical advantage to begin with. So again, this is a game. This is like a game of poker. This is like a game of poker in which you can wait until you have the exact hand that you want. You can literally wait and wait and wait and wait and wait, and at some point, if you see it, you will get the hand that you want, and you can play it, and you can literally get those ones that have like 90% plus hit rates, and that's fucking beautiful. Anyways, let's go check out the weekly. The weekly's going to be closing tonight. If the weekly closes above the red 10 simple, I think that's just overall good, above all major moving averages. Now, there's a counterpoint to that. The weekly is still below the one trend line to rule them all, which is coming in right around about, 9,600. So yeah, same thing on the daily. So both the daily, 2-day, 3-day, and weekly are all showing the same major macro area. If we can close above there, especially today or anytime this week, I would be looking for not just the daily to work its way back up to the targets that we spoke about, but the weekly. You can see that the next major area would be right here, that 11.5, 11.6 area. So we could put another trend line right here, and you can see that there's just not really too much stopping. It does match our. Oh man, this. For the people in the program, if you are in the technical analysis program, go to the liquidity pools module, institutional order flow, and you'll know why this is such a big area right here. I'm going to imagine that volume profile is going to be suggesting the same thing. Oh, yep, there you go. It's literally coming in exactly at this trend line right here. Above this trend line, absolutely pretty much nothing doing comparative to what we've done, prior. So Bitcoin's going to, if Bitcoin can get above this region right here, it's going to fucking rip. Now, of course, could Bitcoin break to the downside? Yes, absolutely. If we break below that 200 simple on the daily, and then close maybe a weekly below the 21, I'd be looking for a move back down to the $8,000 region, like I said. And, do we bounce there again? Probably yes. But from a weekly perspective, I would be looking for overall lower because why? Because this would just be confirmed as another lower high. And if this is a lower high, then we are trending to the downside on a weekly. That's where things get scary. So I would say that this next 2 weeks of price action is going to be absolutely fucking critical for setting up probably the next 4 to 6 months of resulting price action. It's going to be a big deal. If we do resume a downtrend or if we begin a downtrend on a weekly schedule, well, I'd probably be looking down towards the lower 6,000s, as a potential destination. Certainly we could go lower than that. 5,500 is another area that I'd be looking towards. And then I wouldn't really talk about anything lower than that because it's just, it's too bearish right here. But just like that to the upside, if we do take out this trend line to the upside, I would be looking for a move all the way up towards, realistically, there's really not too much stopping us from the bull trap at that $16,000 region in January 2018. So overall, I do want to be clear here. I do lean to the upside. If not for nothing, I could just look at the weekly Stokes. Weekly Stokes want to cross up here, and they will cross up, assuming that we close later tonight at 8 p.m. Eastern Time, anywhere above, especially 9,100, but I would imagine even if we close above 9,000, they're going to cross the upside and get back above the critical zone. Which again has called some phenomenal moves in the past. Getting back above this zone, the double bottom not double bottom, but the bottom in December 2018, and then the higher low that we saw right here, and then of course all these bounces during 2018 during the bear market. So again, pretty damn big deal to me. We do have a little bit of a problem with the weekly RSI. We are getting rejected from the exponential right here. I don't necessarily like that. That would certainly be more on the bearish side. There are bearish things present. While I am bullish here, while I do think that we ultimately break this one to the upside, I don't think that it's cut and dry. I do think that it's worth putting some risk on, absolutely, for myself. But of course, it's not financial advice. I'm not a financial advisor. Let me just make sure that's okay. We are recording. Got already 30 minutes in. Jesus Christ, man, feels like I just started this video. Anyways, oh man, I'm getting hungry. Anyways, let's go to the monthly for a second, because we should be focusing on higher time frames today. Whoops, there we go. Again, monthly above all major moving averages, got that beautiful cross between the 10 simple and the 21. They are getting divergence from each other, and you can see that actually governed that last wick down in the prior month of October. Very similar to what we saw in April 2016, which precipitated this massive run to the upside. Other than that, we don't really have enough history to put on this, but overall, more of a good thing than not. And from a monthly perspective, this would mostly look constructive. Would suggest that if we do come down to that $8,000 level, we very, very likely do bounce there. And then, so if the downside did emerge, the monthly would suggest that it wouldn't necessarily be appropriate to get super, super bearish until 8,000 breaks. But, just creating a downtrend on the weekly with that lower high and resuming that, I think would be pretty damning. So fair enough. Anyways, momentum oscillators, we got monthly Stokes. Actually crossing down right at the edge of the bullish control zone. I don't put too much weight on this right now because these will resume back up to the upside if we do move anywhere above that 9,600-ish level. I'd imagine we're going to see these just cross back up and continue their way. This is a very weak cross right here, and happening this early in the month on the 3rd day of November. We got another 27 days, because I've now learned the knuckle thing, which I actually really appreciate, man. I read all the comments, by the way, as well, or pretty much all the comments. I read all the comments that would be reasonable to think to read. I try to do my best, man. Because it's like if someone's watching this video and giving me the time of day, I would like to give them the time of day as well. It's it's like a mutual respect, right? So yeah, what I look at right here is hey, if we do something like that, there's going to be a null and void point, and it's just too early in the month to really judge something like this. More importantly, monthly RSI is still maintaining above the exponential. We actually did bounce off of it on last month, which, you know, is a very similar signature to what we saw in August, September 2016, coming out of the prior bear market. You know, we got this first major markup right here. Price action comes back down about 30% to that cross, by the way, to test the 10 simple right here, by the way. And we see the monthly RSI getting rejected from this bullish control zone, just like we got right in over here. Very, very common shit. Comes down to the exponential, boom, bounces off and marches up. This one, not exact same, but that's not what we're looking for. We're not looking for exact same. We're looking for historical relevancy to this, and I believe that we have it, or at least good enough for me, as it is. Of course, we've looked at the accumulation distribution indicator quite a bit. It still has a positive slope, which I do like, and I do put a lot of weight on. Also, the labs of the evil genius, Bollypoor, is working on something that I'm really, really excited about with the accumulation distribution indicator and a few other things as well. So I'm going to be happy to present that hopefully soon enough when it is ready. Perhaps he might have actually just sent to me already. I do realize I have a bunch of messages from him, so maybe he actually did, but I didn't have a chance to check it today. I was actually enjoying some sleep last night, so that's good. But I've been a little bit behind on messages, which I should say. Hey, I think I've caught up to most messages. In my Discord. If you feel like I missed you, feel free to ping me back, or it also could just be because maybe you had like an unreasonable request. But assuming that it was for something relevant, it's by no intention that I miss it. So if I did miss it, just ping me back. It's all good. I would appreciate like maybe less people asking me for. I won't get into it. Just. Strange things on the internet make you feel a little bit uncomfortable and a little bit inappropriate as well. Anyways, okay, cool. So looked at all that. I do want to check out the quarterly today as well, or sorry, the bi-monthly and the quarterly. Let's talk about some hashtag gay for TA right here. The bi-monthly. Ending like this, I do think is relatively good. I actually haven't talked about this at all. And the bi-monthly having a fresh cross up to the upside right here. This was fresh as of November, so this was just the other day. We do see the RSI is trending below the exponential, but I don't really think it's fair here because there's not enough real price action history. I mean, in fact, technically we do have some hidden bullish divergence on the bi-monthly, which would just be phenomenally bullish. It would suggest that we're going to work our way back up to like 15,000, probably by end of year, by January. But again, it's hard to trust a higher time frame just because Bitcoin needs probably like 20 years of history rather than 10 to make them look viable. Quarterly right here. I think that we get a new tick. Yeah, we don't get a new tick until January, so it's not really relevant right now as well. But we see kind of a similar thing for the long term. Quarterly Stokes crossing the upside. So I do want to suggest that the higher time frames are more bullish than they are not. It's the lower time frames that that have their ebbs and flows. In lower time frames, I really mean I could say anything below really a weekly in a sense when we're looking at some like from this perspective. So overall, I would be still long term bias the upside. Any sort of a short term, any sort of a short term move, I do think is likely just that, a short term move. But short term moves can take a couple months to play out. We'll call it. If you get like a signal on perhaps like a weekly, that that can still take like a couple months to play out really. Anyway, speaking of the lower time frames, getting them right now. I would like to waste less of your time, or actually, no, we can't do that just yet. Let's go over here to the Bitcoin VWAP ratio. Let's talk about some fundamentals over the long term as well. I'm gonna also learn to zoom in on this, which I've been asked, here we go. We can see how the price chart right here, we have populated the last move, and now we can look at the Bitcoin VWAP ratio, which is still, it's still a little bit scary here. So there's two things going on, and remember, I'll actually go through the full rigmarole right now, but basically there's a lot of things to be aware of with this. So the Bitcoin VWAP ratio is showing a bunch of different moving averages on the VWAP ratio in this pane right here, and then price action right here with those same moving averages essentially. So we're looking at multiple different things to be aware of. First things first, where my cursor currently is right now, like run a regression line through there in your mind's eye. That's kind of like the signal point. If we're generally above there on all three, we're generally bull. If we're below there on all three, we're generally bearish. Then the relationship between those takes that one step further. So if the blue, which is the most reactive, is above the purple and that's above the pink, that is your bull market, as you see right here through this whole area. And vice versa to the downside, when the blue is trending below the purple and that's below the pink, that's when we're in our bear marks right here and right here and right here. Then the strength of that trend is relevant to the divergence between all of those in that same posturing. Now, I've taken this one step further, and I've done a little bit of a deep dive into this, and I've gone through each and every one of these. And actually, in the past, whenever we get the purple below the pink, and they're both and we're living below the regression line that I spoke about, we've actually had some pretty nasty pullbacks pretty much every time. This area right here, for example, 2018. This example right here, bull trap of 2014. This example right here, high of 2014. This example right here, what was this? Pretty massive down in 2013. And this example right here in 2012 as well. Or sorry, 2011, I suppose it would be. So just that alone has garnered, like, for example, 95% retracement right here, 75% retracement right here, 75% retracement right here, 70% retracement on this one, and a 75% retracement on this one as well. Those were all very significant, and thus far we've played out about a 50% retracement. By the way, I think that Bitcoin's going to go down here a little bit, probably going to come back down maybe like 91-ish. Bitcoin's played out a pretty significant retracement, but is it akin to what we've seen before? This is 47% retracement thus far compared to 70, 75, 75 again, then like a 95 and maybe another 71 in there. So that is, that is a little bit scary. I should build up the bearish case more. What I will say though, as we zoom in here, is I will 100% let go of that as not valid if we do see the purple get above the regression line, which it is so far getting rejected from it. So I do think that this is an issue. If I was going to be bearish, this would be the biggest thing for me right now. And it does offer up a way forwards. Not only that, but Bitcoin network momentum, which, you can have multiple interpretations on this, to be fair. Honestly, you can see that's kind of double bottoming right here and looks like it wants to, go lower. But the thing is like there's more custodians in this market as well, so it kind of does make sense for the Bitcoin network momentum to go down. Bitcoin difficulty ribbon, however, would be on the bullish side. When the difficulty ribbon converges on each other, that's our bear market right here, right here, right here, putting in the lows. And when they diverge, that's our trending bullish market right here, and right here as well. And more recently, you do see that we are, once again seeing the divergence between them as as it moves upwards and onwards. So that would be more on the bullish side. So there are a few different ways of looking at this. The VWAP one is less one tested than this, and less direct in its signal as it is right now. If we got the blue below the regression, then it would certainly be very, very bearish, but we don't have that just yet. So I would still say I'd err on the side of the bulls here. Anyways, going down to lower time frames before we wrap this bitch up. Let's see, 4 hour probably looks like it wants to pop back down, maybe test around 9150, 9100. Again, I don't really care so much for the lower time frames right here. Putting on the drawing tools, we do see horizontal coming in. That's been holding up this consolidation as we kind of flag out here, coming in somewhere right around about 50-ish region. So we come down there and still bounce off that, and that's completely fine. It's not until we actually break that when the 4 hour becomes a little bit problematic. We probably are going to see momentum also just turn down here. Yeah, we certainly do see 4 hour Stokes turn down. Historical volatility percentile is actually really, really collapsing here as well. So we likely do see this next move happen early this coming week once traditional opens up. 4 hour RSI losing the exponential as well. We are having a little bit of problems here, so I do think that we probably have some lower time frame downside. But remember, the ranges that are and the ranges that be, this 90, or is it 9, or is it 9,000? No, we'll call it 9,000, not 9050, but 9,000. If that does break to the downside, I'd be looking for a move down to 87, probably bounce there, come down to like 80, 85, bounce there, and then I'd be looking for a move down to like 8,000, 8,200, and then we'll talk about it after that. To the upside. Same area as yesterday. In fact, we actually did test that same area yesterday, 9450-ish region. If we could break above there, I'd be looking for a move all the way up to 9750. So, 4% move to the upside, pretty damn good, very tradable. And that would, more importantly, get us above all of the higher time frame pivots that we spoke about earlier. So, big deal to me, very big deal. And that would likely just align with us, kind of working our way up into this region, which, by the way, This trend line coming in all the way back from June, July, August. Where is that coming in around? Well, it also got a rejection right here too in October, late October, be 10.5, which is the lower end of that next targeted region, if you recall. So yeah, a lot of things lining up there. And that's really it that I have for the lower time frames. We can go through all the lower time frames, I suppose. Why not while we're here? 3-hour Stochs collapsing down. 3-hour Stochs off 30 percentile getting very low. We are going to be seeing a move relatively soon. 2-hour is just fucking, it's falling off the cliff. So we likely do see this populate a little bit. 2-hour Stochs coming down as well. We do see a nice trend line forming though. So let's see if it does bounce it here. We want to see it bounce right here, and look where that is, right at the edge of the bearish control zone. So if we could reject that, that would look overall fine. So to kind of wrap up the lower time frames, I do think that we have some downside in the lower time frames, probably back down to this region right here. But I would be looking for a bounce first and foremost, and then we'll come back and reassess. I would really wait for CMEs to open to really judge the long term or just the higher time frame trajectory. Speaking of CMEs, did close Friday at 92.35, so likely we just kind of maybe play out a little bit of downside and then range, and probably open up somewhere around that level. If I had to hazard a gander or whatever the fuck that saying's impossible, man. So I give up. Anyways, I think that's gonna do it for right now. Or sorry, let's actually. I guess I'll just do the full thing. Let's go for Bitcoin dominance. See what he's doing. Still bullish, still bearish. I think the big thing for me on the Bitcoin dominance is really just the weekly. Does the weekly close above the 200 simple? I'm bullish. That is 69.5%. As long as we close above there, I'm long-term bullish. Short-term, whatever. Again, 69.50 is the same area anyways. To the upside, break above 70 spot 1-2. I'd be looking for a move all the way up into this region, like 71.5 and then 72 actually. So I'd still be bullish on that as long as we remain above 69.50. Let's go see total market cap. I'm curious how this one's shaping up as well. Let's see. You do see the 200 simple providing the impetus for resistance right here of 246 billion, and we do have the 200 exponential moving average right here, getting our wicks to the downside, 231 billion. So again, no real change off over there. But the problem is that if we do break to the downside, there's going to be another lower high. There is significant threat of downside here. Make no mistake about it. This measure move from this area right here is actually still no, it's not valid anymore actually. So I'm actually gonna get rid of that. Let's go look at Litecoin. We'll also look at Ripple today as well. Why not? Because a lot of people are talking about that. It does have this Schwell event coming up. Litecoin getting rejected by this trend line once again. I need to see a close above let's call it like $60 just to be a little bit safer, and then I'd be targeting a move probably up here towards 66 and beyond over time. But hey, if as long as it's getting rejected here, I mean, next stop to the downside is like 55.25. Ethereum did break the trend line, but really stuttering around here, which is not good. Also like my fucking speech pattern sometimes. If it does break the same trend line to the downside, which hesitation here is usually not good in a breakout. I mean, this is not breakout volume or anything like that. I'm just inclined to think that this trend line is just not relevant. Given the price action and the response thus far, that's 2 days. That's enough to kind of judge it. I need to see a close above 191.5 to get bullish on Ethereum. I'd target a move to 215 and beyond if that were to happen. But for right now, if we do break to the downside, 175 is where I'd be looking towards. Let's go look at Ripple. What's Ripple doing? Swell event coming up, typically a sell the event type thing. People bought it up right and over here. The swell conference is having less and less of an effect over time. In fact, I even tuned into a little bit of their live stream yesterday, and it just sounds like a sales pitch. What it sounds like. There's like no discussion of the technology. There's no discussion of like what the fuck they're trying to do or anything like that. It's just like building it up for who knows what. Looking a little bit droopy here. I'm not a big fan of this. Momentum oscillator is going to be turning down. Daily SOX down. Daily RSI bearish. I think that this one probably comes down. Probably comes back down to like the 27-cent region. So does that bring the market with it is the question. Maybe. Maybe it does. Anyways, back on Bitcoin. Let's wrap this bitch up. Again, you can just make it super simple. I'll save the easiest for last. It's all you need, man. You just need a 200 simple right here. No pun intended. 90.50 on a daily little close. As long as we maintain above there, fine. 12-hour 200 simple to the upside. If we could close above there at about 90, a hair below 9,600, then I'd be looking for move up into the targets that we spoke about to the upside. Anyways, that's going to do it for this morning's video. I'll be signing off now. I'm hungry as fuck. I am still surviving some jet lag, but I think it's almost over, which is good. I feel like I get extra fucked from it for whatever reason, but I'll be back on tomorrow. And again, if you feel like I missed any of your messages, please just reach out to me. It's all good. It's by no intention of my own to miss it. It's just things get lost and things get crazy, and I'm just trying my best, but I'm also just not. I'm just not the most organized person myself. So again, I do want to wish you a nice and happy and nice little peaceful Sunday morning. Whichever God that you pray towards, or if you pray towards good old goat Jesus, then I wish you a happy day. Take care and see you soon.